Ashley.
Expected. American Express also setting aside less money to cover bad loans, but that stock down about 2% after hours.
Let's talk earnings now as we go back to Adam Connors out west from CK Cooper, who's back with us. Anything stand out last night? It was kind of interesting that that Google traded off, if anything, on fairly impressive numbers. I guess people were hoping for more from some of these companies.
Yeah, you could say that, or quite frankly, Connell, what I think is that I think we've seen quite a run here against all segments, as a matter of fact. And are we looking for that kind of catalyst that maybe take a little bit off the table? And that's with some of the comments that came yesterday. Perhaps I think that's maybe something we need to be looking at versus individual companies at this point. I mean, especially with the financials and the credit card and everything to that effect. I just think that we were a little bit ahead of ourselves, and that the market was looking for an excuse to take a couple steps back.
How do you think the market is viewing GE this morning?
GE is always, that's the large conglomerate. It almost acts like a mutual fund. And so I think it's always a great indicator to look at the raw data to see how their industrials are doing, as well as their tech sectors, and especially their financial arm, because that's the one that's been in the most focus and was initially what brought GE down so quickly just a few months ago. And so to see what the returns are on that, to see how that silo of the company is starting to repair itself is going to be what folks are going to be focusing on.
Well, GE, as the screen suggests, is under us right now, hit hard by the credit crunch and the global downturn, which is an understatement. They were hit as hard as anybody was, and particularly because of that financial arm that you talked about. The company's made some changes, or is starting to. Of course, the NBC Universal deal is part of that. You think they're moving in the right direction, that going back to their roots, so to speak, is the right way to go about it if you're GE?
Absolutely. They still, once again, they're still a conglomerate, so it's hard to be independent of the economy as a whole. There's not a whole lot of companies that are like them in their position, but I think going back to any company right now, especially GE, going back to their fundamentals, going back to what works, going back to the simple principles and values that a company entails that got them to the place that they're in, those are the folks that are going to hopefully make it through this.
At the same time, it seems like, Adam, this time around, that individual companies are doing less to set a tone into the market than, let's say, what we're hearing from the president, for example. So the earnings season as a whole, how are you assessing the results as they come out? How are you taking that into the strategy that you are putting to work?
Yeah, so basically what we do is we look at the companies and we see, okay, there's a lot of turmoil right now in the economy as a macro as a whole. There's a lot of noise out there. And so what we're doing is we're looking specifically at the companies and we're analyzing their fundamentals, and then we're weighing it against the overall public sentiment, which right now I think the stock market as a whole, as well as the other markets individually, as well as collectively, are somewhat herd mentality right now, and they're going off of a lot of the topic of the week, whether it's government regulation or any type of specific earnings reports and things of that effect. So I think the idea of individually looking at the companies and looking who's going to be able to monetize the best on the outside of this is going to be the American Express, a great example, being up 115% over the last year. They have a fundamental business. They stick to their consumers as being one of the better credit card companies out there, in my opinion, being an American Express member. And so they're sticking to their core business values, and I believe it's going to pay off for them.
But even with companies like this that have run up so much, American Express is an example, and a lot of the technology stocks, we talked about Google, are other examples of that. Can you make the case that the market has hit kind of a near-term high, that we put that in now, and maybe we are going to see that sell-off because you combine companies not living up to loftier expectations on the earnings side, and this lack of visibility and the regulation side, people can't see what the future is going to look like, especially after yesterday's events, then hey, maybe we do see something of a significant pullback in the markets. And is that a buying opportunity, or start as something kind of big to the downside?
Connell, I think that we still, we got ahead of ourselves, with unemployment where it's at, also with with just the overall economy as a whole. The market got ahead of itself. And so what I believe is that I think there is still a little froth right now. And so I personally, I'd even wait a little bit longer, because I think there's going to be, some backstepping here over the first quarter, and there's going to be just a lot of volatility and a lot of buying opportunities. So, there's good companies out there. A lot of these companies, they report these earnings in regular times, and I say regular times gently. These are great earnings. These are companies that are turning it around and doing very well for themselves, coming out of one of the worst economical crises that we've experienced. So, it's actually kudos to them, and hopefully the market as overall will take a step back, and they're good companies to own.
All right, Adam, good to see you. Thanks for coming on this morning.
Adam
Connors out in California. Now, next up here, you get your Food Net.